Hey guys, my name is Joseph Graff, and in today's video, I'm going to be sharing with you all my Robinhood and M1 Finance portfolios. The last couple months have been a wild ride in the stock market, and I wanted to show you all how my portfolios have been doing. We'll look at my past performance, and I'll also talk about my plans going forward. So without further ado, let's get it. Alright guys, so today we're going to start out in my Robinhood portfolio. So this Robinhood portfolio, I have a wide variety of stocks. I started this Robinhood portfolio about 3 years ago when I really just wanted to learn about investing. I went out and I put in maybe like $50 a week and bought companies that I was interested in and had done some research on, and really used it as a tool for learning. So we'll walk through my account, and the first thing that I'll do is I'll show you how this portfolio has performed so far. So this past trading day, I was up about 0.3%. Over the last week, I actually broke even at, didn't make any money, didn't lose any money. Over the past month, I'm up 1.2%. Over the past 3 months, I'm doing pretty well, up 9.4%. Over the past year, not doing as hot, down about 8%. And all time, I am in the green. I am up about 4.5%. So recently, what my main strategy has been is I have set up recurring investments in this Vanguard Total Stock Market ETF. I really like this ETF because it tracks pretty much the entire U.S. stock market. I'm a big fan of investing in the U.S. stock market, as historically it has been a great investment. That doesn't guarantee that it will continue to be a great investment going forward, but so far I'm kind of liking this strategy. So I've gone through about, I think, probably 10 to 12 weeks now where I've invested $70 a week. What I really like about this is I don't have to do anything. I set up the recurring investment, and Robinhood takes care of it. I believe it's every Wednesday. It just goes out and buys $70 worth of this VTI ETF. So very simple, and I've actually done pretty well on it. I'm up about 10.4%. The other thing that I have been purchasing shares in as a recurring investment is VXUS. So this is a international stock ETF, so it tracks a lot of companies outside the U.S., and I have been investing $20 a week into this ETF. It's just a way for me to get some international exposure. I know I have a lot of exposure to U.S. stocks. I also wanted to get diversified a little bit and invest in international stocks. So on this investment, I'm actually up about 10.9% as well. The last thing that I have set up for recurring investment is bond, which is the Vanguard Total Bond Market ETF. I invest $10 a week in this ETF. I'm pretty young, and a lot of the investing I'm doing is for retirement, so I want to stay pretty aggressive, so I chose not to invest a whole lot in the bond market. However, I do think it's nice to have at least a little bit invested in the bond market in case the economy was to take a downturn, and then instead of taking the big hit that I would because I'm owning only stocks, hopefully that wouldn't be quite as bad because I do have some of my portfolio allocated to bonds. And on this investment, I'm up about 1.6% all time. I kind of expected this. I did not expect the returns to be that high because, like I said, it's bonds and not stocks. So outside of that, some of my largest holdings include Waste Management, which is probably one of my favorite companies of all time. I've said this before on the channel, but my personal opinion is that there's always going to be trash, and people are always going to need somebody to pick their trash up, which is why I really love a company like Waste Management. I'm up about 12.2% all time on my Waste Management holding. I also own a little bit of Procter & Gamble, a couple shares of Coca-Cola. Both of these stocks have done pretty well for me. My Coca-Cola is up about 13.6%. I've also received a couple nice dividend payments from them. I really love seeing dividends come into my account. That's something that gets me really excited about investing. So it's really cool, every time I see those dividends come into my account, and then I have it set up in Robinhood so they get reinvested into the stocks that pay them. So the dividend I got from Coca-Cola a month or two ago, it got directly reinvested into Coca-Cola. So next time Coca-Cola pays a dividend, I'll receive even more money. It's compound interest, and I think there's something about compound interest that just kind of feels like magic to me. So I think it's really cool. I also have a Schwab dividend ETF. I really like this ETF. It tracks some really good companies. In my opinion, it seems a little bit safer than like a total U.S. stock market fund, because this ETF tends to hold some larger cap companies, some more established companies, and then it's nice to see the dividend payments from this. And I'm actually up almost 28% all time on my Schwab dividend ETF. I own a share of the Standard & Poor's 500 ETF. I also own 10 shares of Realty Income. Realty Income is pretty much known as the monthly dividend stock. They pay out dividends every single month, and I think their dividend yield right now is a little under 5%. Currently, I am down about 1.5% on this stock, but I'm not that upset. I have been getting these monthly dividends. A couple weeks ago, I bought 5 more shares. I pretty much doubled my holding from 5 shares to 10 shares. So now instead of $1.18 every month, I'm receiving $2.35 per month. I've looked at Realty Income. I think they should be able to sustain their dividend payments into the future, and I think it should grow slowly. But I'll keep my eye on Realty Income. I know with everything that's going on in the world right now, there are some people and companies who are defaulting on their mortgages and rent payments, and I know that could really affect a company like Realty Income. So I'm going to be keeping my eyes on them. While I'm thinking about it, I used to own quite a bit of Standard & Poor's 500 high dividend, low volatility ETF. This was an ETF that paid monthly dividends, and I really liked it at first. But kind of the weird thing with this company is, if you look at this chart, the value of the ETF dropped off big time around the time the whole stock market dropped. But what's really weird is it didn't really recover that well. So part of me wonders if the holdings of this ETF are really actually good companies to own. I have to look into this a little bit more. It is kind of an interesting ETF. If you like monthly dividends, it's probably worth looking into. But like I said, I was not real thrilled with its performance over the last couple months. Kraft Heinz has been one of my best investments. I'm up 53% on it. I think I bought it at around $20 or something, a little over $20, and it's at $35 now. They also pay a pretty nice dividend. I'm receiving $2 every quarter from them. I'm very happy with that. And then I own some Johnson & Johnson, and then a Vanguard Total World Stock ETF. And then I have invested $500 into Apple, Microsoft, and Amazon. These investments have paid off pretty well for me. I'm up 45% on my Apple investment. I think Apple is a great company. I was shocked that they rebounded as quickly as they did after the major stock market drop, and they are well past where they were at before that drop. So the next thing I'll talk about is Microsoft. Microsoft has also done really well for me. Not quite as well as Apple, but I am up 23% on it. Very happy with this. I like Microsoft as a company. And then I bought some Amazon about a week and a half ago. I bought $500 worth. I am down slightly on it, but I really like Amazon as a long-term holding. I think people are going to keep buying stuff online, and I think people are going to buy more and more stuff online because it seems pretty evident that the coronavirus is not going away anytime soon, or at the very least, we will continue to see its impacts over the next few years. So with that, I just want to tell you all a short story about what went on with this portfolio. I actually made a mistake that I promised myself I would never do. As you all can see, I took a pretty big drop after the stock market crash, dropped all the way down here, and then my recovery was not quite as strong as the rest of the stock market. So what happened is I did get kind of scared as the market was going down, and I sold off a lot of my positions, which was a big mistake. Really, if I would have just held on to everything, I'd probably be up back around up 20% all time, but instead I'm up 4.5%. And the reason I'm kind of mad at myself for this is I told myself that the stocks that I own, I was going to hold forever, use it to help me with retirement when I get to be that age, and I didn't follow my own advice. So let that be a lesson to you. Generally, I've found that it's better to have an investment plan and stick to it than try to time the market. So with that, we'll go ahead and jump on into my M1 Finance portfolio. All right, so here we are in my M1 Finance portfolio, and as you all can see at the top, I have titled this portfolio Dividend Growth, and that's because I'm really focusing on earning larger and larger dividend payments over time. So what I did with this portfolio is I picked out my 3 favorite companies in each sector, and every week I invest $1 into each of those companies. So I invest like $33 a week, and my goal is to receive dividend payments, and as I invest more and more money, hopefully those dividend payments will get bigger and bigger, and I'll reinvest those dividend payments, which will further increase my growth. So pretty excited about this portfolio. I'm pretty happy with how it's done so far. I did switch it up about 3 months ago. I originally had 100 different holdings, which was just way too many. I thought it would be cool to see, dividend payments coming in left and right because I owned 100 different dividend paying companies. But kind of what ended up happening is I had like $20 invested into 100 different companies. So I'd get dividend payments, but they'd be like, 5 to 10 cents, which isn't necessarily a bad thing. But the real problem was it was very, very difficult for me to manage these positions. There were companies that I was holding that I probably should have sold out of. There were companies that I owned that I probably should have been buying more of. And it was just real difficult to manage 100 different positions, and something that I really didn't have time for. So I cut it down to 33, which is a bit more manageable. Even then, it's kind of hard to keep track of 33 different companies. If I could do it over again, I think I probably would have picked my favorite company in each sector and invested into that. But the advantage of doing what I'm doing is I am pretty well diversified, so I can't be that upset. Now, I believe that like 30 of the companies that I own pay dividends. I do own a few companies like Google that does not pay a dividend. And pretty much the reason that is I picked out my 3 favorite companies in each sector. So I believe Google was my favorite in the technology sector, and they didn't pay a dividend, but that was okay with me because I still wanted to own them. So we can look at how this portfolio has done over time. And as you can see, I did get hit pretty hard when the stock market dropped back in March. But I'm not doing too bad anymore, and all time I'm only down 4.85%. And I'll show you all how this portfolio has done over the past day, week, month, quarter, and then year. So this past trading day, I was up almost 0.7%. Over the past week, I was up 3%. Over the past month, I was up 3.52%. Over the past quarter, I'm up 8.8%. This past year, I'm down 4.6%. And all time, as I mentioned earlier, I know it's loading, but I am down 4.85%. So I started this portfolio back in June of last year, I believe, and just been slowly adding money to it. I don't have a ton invested, but it's slowly growing week after week. And I'm pretty happy with the direction it's going. So with that, I'll show you all my best and worst holdings in terms of total gain. Now, keep in mind that M1 Finance has a kind of strange way of calculating your total gain. So as you can see, Apple is my best performing stock, and it really is my best performing stock in my M1 Finance portfolio, but I'm not up 222% on it. It's probably more something like 30 or 40%. Nonetheless, Apple has done pretty well for me. Air Products and Chemicals has done well for me. it's up quite a bit. It's not up 172%. And then Sherwin-Williams, this one kind of surprised me. They are up quite a bit for me. So pretty happy with the returns I've seen. Like I said, I'm not entirely sure why M1 Finance calculates these returns this way, but just going off of the returns I'm seeing here in green, it looks like I'm up around 30 or 33% on Apple, up around 33% on air products and chemicals. So now that we've seen some of my best holdings, I'll show you all some of my worst performing holdings. So my worst performing holding is Duke Energy Corporation, down slightly on that, just about 2.5%. Down a bit on Kinder Morgan. I am down a little under 1% on that. And then Nike is actually my third worst holding. And even that, I'm up about, I don't think I'm up quite 7%, but I'm probably up around 4% on Nike. So, like I said, pretty happy with this portfolio. The reason that I am down all time on this portfolio, even though a lot of these stocks are showing some pretty good gains, is because I sold off a lot of my losers when I cut my portfolio down from 100 to 33 stocks. So that's why you all are seeing a negative return all time, even though it seems like a lot of these stocks have done well. So with that, I'll show you all some of my dividend payments over the past couple weeks. So pretty recently here on July 15th, I got 30 cents from Realty Income. I talked about them on my Robinhood segment of this video. July 10th, 32 cents from American Tower. July 1st, 6 cents from Nike. July 1st, 56 cents from Coca-Cola. On July 1st, I got 11 cents from Brookfield Renewable Partners. I also got a 7 cent and 4 cent dividend from them as well. I know certain companies on M1 Finance, their dividends show up kind of weird, and I think that's because Brookfield Renewable Partners is a MLP, which kind of has a different structure, and they're required to pay out a certain amount in dividends. And I think that's why I ended up with these 4 different dividend payments, with one of them being negative. On June 30th, I got 31 cents from United Health Group. On June 30th, I also got 14 cents from Union Pacific, and also got 51 cents from Digital Realty Trust. So with that, I think I'll wrap up today's video. I want to thank you all for watching. If you enjoyed the video, please hit the like button. Please subscribe to the channel. And please hit the notification bell so you can be notified when I post future updates. Thanks for watching, and JGraph out.